Sandip Sabharwal and get his perspective on the market. Sandip, it's great to have you on the show. Thanks very much for taking out the time. Give us your sense on how you would be looking at the global picture and then putting India in that context, because we're actually okay. We're doing okay for a largely weak global backdrop.
I think the global picture in my view, in a nutshell, is that the global growth is likely to slow down next year, and the global liquidity is also likely to tighten. So I think it's a double-edged sword in that sense that the Fed will continue to reduce its balance sheet size, and on top of that we'll also have a slowdown in the global economy. Europe has its own issues. Fresh bond buying by ECB is also not going to happen. So global funds flow is the tough picture to predict how that will flow. Domestically, the macros are extremely positive with the reduction in interest rates, a rise in bonds, a fall in bond yields, and crude oil prices being where they are. So I think domestically the macros are very strong. Global fund flow picture is uncertain, I would say. So in this environment, I would think that on the large cap indices we might not see very big moves in the near term, but on the mid cap side, the broader markets will outperform significantly, and that's where the opportunity should be looked at.
You know, Sandeep, we were chatting about this yesterday as well. The fact that some of the aviation stocks has recovered the way they have, along with the crude decline from their October lows. Do you still believe that the way the crude is cooling off on a daily basis, almost there's still opportunity to maybe trade aviation names, if not invest in them?
Yeah, so I think they do offer trading opportunities at various points of time in the year, and I think right now is again a good opportunity because the main input price, that's ATF, is coming down substantially, and we seem to be having some pricing discipline in the domestic market with the kind of rates which we are seeing across sectors. So I think on both sides it's positive. So I would think that aviation stocks do have a 20 to 40% rally depending on which stock you are buying in them.
Right. Sandeep, do want your opinion on how you'll be positioning yourself with some of the oil and gas names, especially given what crude has done.
So oil and gas, like I've reiterated in the past, that it's more a question of whether these companies are going to get back the margin of a rupee per litre which they surrendered or not. And at these prices of crude, it will be prudent for the government to give it back because it doesn't go out from their pockets, the consumer doesn't feel it, and the profitability of these companies improves, which actually leads to higher dividends and overall sentiment improvement in the market. Why the government is still not doing it is somewhat intriguing, because that move was taken when crude was 85, today it's 55, and a lot of the price cuts are still to come over the next 8-10 days. So 1 rupee less of price cut can be easily absorbed. So if that happens, I think BPCL, HPCL, IOC could have 20-25% upside in them. If not, there's no story per se.
Yeah, fair point. Sandeep, it's almost like there is a revival and new lease of life given to NBFCs, especially after the OMOs conducted. There's also some traction coming in on PSBs after that mega recapitalization plan also got announced. Anything that interests you and beyond the usual names like an SBI and a Bajaj Finance in either categories?
Yeah, so I think the names don't change in a few days. So M&M Financial, L&T Finance Holdings, Manappuram Finance, I think among the NBFCs, these are obviously interesting names. On the large corporate banks, obviously SBI, Axis Bank, ICICI Bank, all of them will do very well because liquidity improvement is going to help them a lot. But liquidity improvement actually helps NBFCs much more than banks, because banks have a CASA franchise also. So the greater delta will be seen in NBFCs, and as the third quarter results come out, I think that will be the time people will realize this, and many of the NBFCs, even the large established funds, are still down 25-30% from the top. So there is upside of at least 15-20% in most of them.
Okay, would want your opinion on this whole news about sugar sops also being extended out. I know while it's a small sector, underrepresented, you still have a focus on sugar given it's so badgered. Is there a trading opportunity here?
Yes, because the government obviously realizes that it's the farm engage which led to the kind of losses they had. They had narrow losses in some states, and if some issues had been handled properly, maybe they would have won these elections. So UP being an important state, I would think that some moves could happen there. And sugar in any case is a good story because of the drought in Maharashtra, Karnataka. We are seeing sugar production coming low, so UP based companies benefit. Prices will tend to move up next year, and plus you have the ethanol story also. So overall it's a good story to play. So among the companies which we track and we have holding are Balrampur Chini and Triveni Engineering, because Triveni Engineering has a double story where they have a sugar story, and they have an engineering division which has also started to do very well. So even that stock seems to be pretty undervalued.
Okay, Sandip, stay with us. I'm going to get in my colleague Ruchi Bhatia as well, joining in from New Delhi with some more details on the PSU Bank recapitalization plan.
As reported by ET Now, this is of course a big bonanza coming in for PSU banks. Remember, ET Now on Monday had said that the government will go in for additional fund infusion for PSU banks as a part of the supplementary demand for grants, and that is exactly what they have done. So additional 41,000 crore rupees of PSU recap bonds will be given to PSU banks. What is of course important to note is that this is of course going to be on the basis of performance of a lot of these PSU banks. So big banks like SBI will not be given any funds because they will be able to tap the funds from market. But all in all, if you look at FY19, 65,000 crore was what was already budgeted for, out of which 23,000 crore rupees the government had already infused, which means the balance of 42,000 crore rupees plus the 41,000 crore rupees fund infusion that the government has done now. So all in all, 1.06 lakh crore rupees will be infused in PSU banks by the end of FY19, which of course will help them in meeting their regulatory capital requirement. Many of these banks will also come out of the PCA framework, and this will also help in ensuring that the banks are able to lend more freely. But having said that, as far as which will be the banks who will be awarded these funds, we're given to understand, as I've said, that bigger banks will not be given these funds. Bigger banks like SBI, similarly IDBI's bank's requirement will be mainly met via LIC's hike in stake. PNB will be able to get these, will be able to raise funds via their non-core asset sales. So the other banks, most of them which are under the PCA framework, will be the ones that will be awarded this capital. We are given to understand that the likes of Bank of India, Allahabad Bank could be some of the names that could in fact look to come out of the PCA framework. We are of course awaiting Finance Minister Jaitley's press conference. He will be addressing the media and detailing the contours of this fund infusion very soon.
Okay, thanks Ruchi for that. Let's also listen in to what our consulting editor Maithili Busnarmat made of the additional spending announcement.
Yes, the government has filed a supplementary demand for grants. This is the second supplementary demand for grants in this fiscal year. And though the gross amount is quite high in the region of about 85,000 crores, the net additional cash outflow is only about 15,000 crores. The good news really is that a substantial part of it, in fact, the bulk of it, close to 50% of it, in fact, is going to go for recapitalization of public sector banks. And this is something that was long overdue. In fact, and looking back in hindsight, it's a little amazing that the government did not do this kind of recapitalization earlier in its tenure. not only in if not earlier in its present fiscal year, because this would have made a huge difference not only to the banks which are currently under PCA, but also would have enabled banks to lend more aggressively to the country, especially to industry. So the good news is that at last the government is moving ahead to recap public sector banks. We're not very sure which of the PCA banks, because there are currently 11 PCA banks, public sector banks, which are under PCA. Now, it's not very clear which of the banks will receive it and on what basis, but to the extent that this amount is going to go to the public sector banks, it will certainly ease some of the credit crunch that we're seeing in the economy. As far as the other amount of 2,300 going to Air India is concerned, this is perhaps inevitable, because the government did try its best to get Air India off its hands, but it did not quite succeed. So in the interim, we have no choice but perhaps to throw good money after bad and try to keep Air India afloat till such time that the climate is more propitiate for the government to continue with that disinvestment for Air India.
Okay. Sandip, your call on aviation?
Yeah, I think we just talked of aviation some time back, that I think most of the aviation stocks, based on which one you are buying among the three, are ripe for a 20 to 40% rally.
So I asked you about NBFC space. Let's also talk about banking space, and corporate banks are something which people are recommending these days. Three options. Let's discuss which is your preferred option. And I know a lot of people are recommending, and we dwell more about ICICI Bank. But what about Axis Bank and SBI? What's your thought process over there, and how you rank these three banks as per your liking?
So I would think that ICICI Bank is very well positioned, because it has a strong corporate franchise both among SMEs as well as large corporates, and plus it's very strong on the retail side. And between ICICI and Axis, ICICI has a better CASA franchise, so that gets it cheaper funds, and then there is the value of the subsidiaries also, which is not fully realized at this stage. So preferred would be ICICI. Greatest delta of earnings improvement could be in SBI if the bad loan write-offs reduce, because in terms of net interest income per quarter, it's got such a humongous net interest income that once the write-offs reduce, the profits that it can report will be very, very significant. But when that will happen, this quarter, next quarter, quarter next to that, that's something one has to watch out for. But over the next 2 years, SBI will be in huge profits, and I think at that, and in the run-up to that, over the next 2 years, SBI should do very well.
Okay, just let's revisit what else is happening in the market right now. While we've recovered quite a fair bit actually from the lows of the day, and definitely not fallen the way the global markets have fallen, a lot less. It is the metals pack definitely which is taking a whack right now as we speak. And we were just talking about it earlier as well, as to how the new tariffs on Rusal, they are having their impact on what's going on with the metals market as well. And we just talked about it too. Sandeep, wanted to get your sense on, the kind of movement that you're seeing on metal stocks because of the sanctions on Rusal being lifted. You've already seen LME aluminum fall quite a fair bit. Do you sense that this could be a sustained move, or do you think this is just a knee-jerk reaction, what we're seeing on metal stocks today?
No, in metals, one is the impact of the sanctions removal. Secondly, the bigger impact what we are going to see in 2019 is of that of global slowdown, a slowdown in the demand, the increase in demand for metals overall. So I would think that as an overarching theme for the year 2019, metal should largely be an avoid. I think commodity stocks will largely underperform ex of a domestic commodity like cement, which I think should do well.
Brent crude falls below $55 to a barrel for the first time since September 2017. I don't know whether we can get a quick reaction on crude, but this is an important story. And I know while we've spoken about oil and gas, we've spoken about aviation at large, let's just focus a bit, Sandeep, on just the oil market, because it has, I think, an overarching influence on sentiment in markets per se. While, this may not be a clear comparison to what happened in December of 2015, which then spiraled out of control in Jan-Feb of 2016, it does give you a sort of a deja vu sense when you look at the oil market coming off so quickly.
Yes, that's true, because see, lower oil prices are good, but very low oil prices are not good, because oil and gas exploration forms a big part of global capital expenditure cycle. So if oil prices fall too much, we see cutbacks in that, and then it impacts the overall global economic outlook. So I think low oil prices, while they are very good for India standalone, but for the global economy, very low oil prices are not very good, because not only it has an impact on capex, but there are a lot of countries, especially Middle East, Russia, etc., where it impacts their economy very negatively. So I think a stable oil regime at levels around $60 is something we should be happy about. Very low oil prices will help the domestic macroeconomy, but in terms of global funds flow, I think it will be a negative.
Sandip, does this make the IT trade meteor?
Yeah, IT, I think, will face a significant amount of headwinds next year. Firstly, the Fed itself has cut down the growth estimates for the US economy, and in general it's expected that the slowdown could be actually more than what the Fed expects. So I think we could see business issues next year, and on top of that we have the currency advantage going away for most of these technology companies. So I would think that given the over ownership of technology stocks among investors, both domestic and global, we could see this being one of the worst performing sectors after commodities for 2019.
Okay. Sandip, also give us a sense on how you would be looking at some of the mid-tier IT names. Are you seeing opportunity there? There's already talk about that stake sale, impending stake sale, or at least a stake sale in the works for Mindtree.
No, I don't think there's any great opportunity, because most of the mid-cap companies also were showing improved profitability, largely due to the rupee advantage which they were getting. And once this goes away, and you remember this, just remember that this appreciation in rupee this quarter is normally not a time when seasonally rupee is very strong. Seasonally rupee is normally very strong Jan to March. So we could actually see a further appreciation of the rupee going into the next quarter, and next 4-5 months I would think that technology stocks will give up further from the current levels.
Okay, Sandip, thanks very much for joining us with your perspective, and appreciate your insights.